Welcome to Short View Trading. This is your morning market hit for Friday, 26th of November. What matters today for traders? Well, pandemic fears have resurfaced overnight on fears of a new COVID strain thought to be more transmissible and potentially more deadly than the Delta variant. And the market reaction has been pretty dramatic. You can see, for example, S&P 500 futures opening sharply lower. Of course, the weakness has been enhanced by thin volumes given the Thanksgiving holiday. We're back at the early November lows now, and not surprisingly, rates and bond yields are also much lower across the curve, with the 10-year yield trading at around 152, 2 years back at 53 bips, and linked to that move lower in yields, the cyclically sensitive parts of the market have come under the most pressure this morning, with indices like the Russell down sharply by over 4%, while tech indices are of course down by less. The Nasdaq, for example, only down 1.4% this morning at the time of this video. So the key question therefore is, how worried should we be? How much more downside should we expect in equity markets over the course of coming trading days? Usually at times like these, in moments of very negative news flow and high levels of uncertainty, it takes time for markets to price and digest the information, and while they do that, volatility remains high, usually until there are signs that markets are oversold, fearfully priced, and when we're getting lots of buy signals from our short-term models. Clearly there are some signs of panic emerging. There's been a spike, for example, in the VIX. That's a good sign that fear is currently elevated. Having said that, not all of our models are at buy or strong buy levels, and there's not a great deal of downside put protection in portfolios. That's certainly the message of this indicator that you see on your screen now. The CBOE puts call ratio is broadly mid-range. So how much lower do we go in equity markets? Well, we answer all of that in our daily publication. In it, we make a 1 to 2 week trading recommendation, long or short, on US equity futures with a 1 to 2 week time horizon. It's available on the website to subscribers. We also offer a free trial. If you're interested, click on the link below, enter your name, email address, no credit card details required, and we'll send you our daily trading publication free for 7 trading days. So what gives us an edge as we make these calls? Well, the answer is the messages we get from our short-term trading models. Some of them, as I say, are close to buy. Others are not there yet. We also like to look at key levels on these markets. The S&P, you can see, for example, the next key support level will be 45.49. That's the September intraday high. And then below that, 44.85. That's the 50-day moving average. So how likely are we to get down to those levels? What's the message of all of the other indicators we have? And how are we trading this market? Have a look at our daily trading publication for detail on all of that. What are we watching today? Well, we're pretty light on data and events. Price action, of course, will be key. We'll be watching that closely. Today is a half day of trading for Thanksgiving. That was your morning market hit. Do follow us on YouTube, search under Short View Trading. Join us on Twitter, LinkedIn, and/or Facebook. Thanks for listening.